Hello everyone, welcome back to Financialistic. Today we are diving into a very exciting and growing investment opportunity, real estate investment trust or REITs. REITs are making waves as a way to invest in real estate without directly owning property, and they offer a unique entry into the market that's affordable and accessible for many Nigerians. In this video, I'll break down everything you need to know to get started with REITs in Nigeria. Let's kick things off with the basics. What exactly is REIT? REIT stands for Real Estate Investment Trust. It's a type of company that owns, operates, or finances income-producing real estate. REITs pull money from various investors to purchase real estate assets like commercial buildings, hotels, shopping malls, and even residential properties. So if you invest in a REIT, you're essentially buying shares in a real estate portfolio managed by professionals. This is a big plus because it means you don't have to handle property management or maintenance. All of that is taken care of by REITs management team. REITs in Nigeria are regulated by the Securities and Exchange Commission, ensuring some level of security and transparency. Now let's look at the types of REITs available in Nigeria. Typically, REITs are categorized into three main types: equity REITs, mortgage REITs, and hybrid REITs. Equity REITs. These are the most common type. Equity REITs own and operate real estate properties that generate income through rents. This means that as a shareholder, you earn income through regular dividends from the rental income generated by the properties the REIT owns. It's a popular choice for those looking for steady income. Mortgage REITs. Mortgage REITs don't own properties directly. Instead, they provide financing for real estate by purchasing or originating mortgage and mortgage-backed securities. Investors in mortgage REITs earn through interest payments, which can be a bit riskier since they are influenced by interest rates. Hybrid REITs. As the name suggests, hybrid REITs combine both equity and mortgage REITs, offering the best of both worlds, some properties and some mortgages. However, these are less common in Nigeria. In Nigeria, you'll find mostly REITs are equity REITs, focusing on commercial and residential properties in major urban areas. So why should you consider investing in REITs? Let's explore some of the key benefits. Diversification. Real estate is a great way to diversify your investment portfolio. By investing in REITs, you get exposure to the real estate markets without actually having to buy a property. This is especially beneficial in Nigeria, where property prices can be very high. Accessibility. One of the biggest advantages of REITs is accessibility. You don't need millions to get started. Many Nigerian REITs allow investors to buy in with relatively low amounts compared to traditional real estate investments. Passive income. REITs generate passive income through rental income and property sales. The income is often distributed as dividends, which can provide a steady cash flow, especially if you're investing in an equity REIT. Liquidity. Unlike traditional real estate, REITs are traded on the stock exchange, meaning you can buy and sell shares as you would with other stocks. This makes them a much more liquid investment than actual property ownership. Professional management. REITs are managed by professionals who have expertise in real estate, so you're not burdened with property management responsibilities. Now, it's important to remember that, like any investment, risks come with risk. Here are a few to keep in mind. Market risk. REIT prices can fluctuate due to changes in the stock market. If there's a downturn, REIT values can decline along with the broader market, impacting your investment. Interest rate risk. REITs, especially mortgage REITs, are sensitive to changes in interest rates. Rising interest rates can make REIT dividends less attractive compared to fixed income investments, which may affect their value. Economic downturns. A recession or a dip in the economy can reduce property values and rental income, which in turn affects REIT earnings and your dividend income. Management risk. The performance of a REIT depends on the management team's ability to make sound investment and operational decisions. Poor management can lead to lower returns or even losses. So how to get started with REITs in Nigeria? Let's get into the steps you need to take to start investing in REITs in Nigeria. This is where the process becomes very practical. So grab a pen and take some notes. Number one, research REIT options in Nigeria. Start by researching the REITs available in Nigeria. Some popular Nigerian REITs include UPDC REITs and the Union Homes REIT. Each REIT has its own portfolio of assets and its own strategy, so it's crucial to review their past performance, assets under management, and dividend history. Number two, check the regulatory status. Make sure the REIT you are interested in is regulated by the SEC. This ensures that it's being monitored for compliance and offers a safer investment environment. Number three, consider your investment goals. Think about what you want to achieve with your investment. Are you looking for steady income, capital appreciation, or a combination of both? Your goals will help you choose the right type of REITs. Number four, decide on your investment amount. Once you've identified a REIT, decide how much you want to invest. Many REITs in Nigeria allow small investment amounts, so you don't need to commit huge sums upfront. However, as with any investment, it is wise to only invest money you are willing to set aside for the long term. Key metrics for analyzing REITs. When it comes to investing in REITs, understanding performance metrics is crucial. Let's go over the key metrics that can help you assess whether a REIT is a good investment. Funds from operations. FFO is a metric commonly used to measure a REIT's cash flow from operations. Unlike net income, FFO adjusts for depreciation, giving a more accurate picture of the REIT's profitability. Generally, a REIT with steady or growing FFO is considered a good sign of health. Adjusted funds from operations. AFFO is an even more refined measure. It takes FFO and subtracts capital expenditures like property maintenance. Since REITs are required to reinvest to keep properties in good shape, AFFO gives you a clearer idea of cash flow after these necessary expenses. Dividend yield. This is a key metric for income-focused investors. Dividend yield shows you how much you are earning relative to your investment amount. To calculate it, divide the REIT's annual dividend by its share price. If a REIT offers a 6% dividend, you would earn 6% on your invested capital annually, provided the dividend stays constant. Occupancy rate. For REITs that earn primarily from rent, the occupancy rate is important. A high occupancy rate means steady rental income, while a low rate may suggest challenges. Look for REITs with consistent high occupancy rates, ideally above 90%. Net asset value. NAV represents the market value of a REIT's properties after liabilities. Compare the REIT's price to its NAV. If the share price is below NAV, it might be undervalued and offer an investment opportunity. Reviewing these metrics will give you a solid foundation to evaluate whether a particular REIT aligns with your goals and risk tolerance. Dividends are a huge draw for REIT investors. REITs are required to pay out a significant portion of their income as dividends, which can be a fantastic source of passive income. Here's what you should know about dividends in Nigerian REITs. Number one, frequency of payments. In Nigeria, REITs often pay dividends quarterly or annually. So be sure to check the dividend schedule of the REITs you are investing in so you can plan your cash flow. Number two, dividend reinvestment options. Some REITs offer dividend reinvestment plans, allowing you to automatically reinvest dividends to buy more shares. This is a great way to grow your investment over time as it compounds your earnings without additional out-of-pocket contributions. Number three, taxation on dividends. Dividends from REITs in Nigeria are typically subject to withholding tax. It's important to factor this in when calculating your net returns, as taxes can affect your overall yield. Checking the specific tax implications or rates on REIT dividends is essential for accurate financial planning. Now that we've covered the metrics and dividend essentials, let's look at some of the tips that can help you make the most of your REIT investments. Diversify your portfolio. While REITs are a great way to gain exposure to real estate, it's wise to balance them with other asset classes. Consider combining REITs with bonds, stocks, or mutual funds to minimize risk and create a well-rounded portfolio. Focus on quality over yield. A high dividend yield might seem attractive, but it's not always the best sign. Sometimes a high yield can indicate a REIT's price has dropped due to poor performance. Instead, look at the REIT's overall financial health, property quality, and management track record. Stay updated with market trends. Keep an eye on real estate trends, especially in the Nigerian market. Changes in the economy, interest rates, or property laws can significantly impact REIT performance. For instance, an economic boom might drive property prices up, benefiting REITs, while high inflation or interest rates could pose challenges. Consider long-term investment. REITs are generally better suited for long-term investments due to the relatively steady cash flow from rental income and the potential for property appreciation over time. While you can trade REITs like stocks, staying invested long-term can help you ride out short-term market volatility. Now, if you're ready to invest, let's go over the steps to buy REITs in Nigeria. Number one, open a brokerage account. To buy REITs, you need to open an account with a brokerage firm that offers access to the Nigerian Stock Exchange, as that's where REITs are publicly traded. Some popular brokers include Meristem, ARM Securities, and Stanbic IBTC. Number two, select a REIT. Once your account is set up, choose the REIT that aligns with your goals. As we discussed earlier, analyze the REIT's metrics, dividend yield, and property portfolio. Number two, select a REIT. Once your account is set up, choose the REIT that aligns with your goals. As we discussed earlier, analyze the REIT's metrics, dividend yield, and property portfolio. You'll find details on these REITs on the Nigerian Stock Exchange website or your brokerage platform. Number three, place an order. After selecting a REIT, place a buy order through your brokerage platform. You can specify the number of shares you want and review any associated fees. Once you've made your purchase, you're officially a REIT investor. Number four, monitor your investments. Remember to keep an eye on your REIT investment over time. You don't have to check it daily, but reviewing quarterly or annually can help you assess your performance and make any necessary adjustments. And that wraps it up. We've covered how to analyze REITs, understand dividends, and some smart tips for maximizing your returns. Investing in REITs can be a fantastic way to grow your wealth, especially if you're interested in real estate but don't want the hassle of owning property directly. Thank you so much for tuning in. If you found this video helpful, please give it a like and don't forget to subscribe for more content on investing in Nigeria. Let me know in the comments if you're planning to invest in REITs or if there's another topic you'd like me to cover. Until next time, happy investing.